Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today we had the pleasure of interviewing Chris Vermeulen of the Technical Traders. How you doing today, Chris?
I'm good, Daryl. Thanks for having me. Looking forward to talking markets.
Yes, so today is Friday, the 20th, and I know the audience want to know what date this was recorded, right? And today I think it'll be good to look at the market's reaction to the tariff ruling. So many companies had issues with the tariffs because they couldn't really plan long term with the uncertainty of especially the retaliatory tariffs and such, and tariff wars back and forth, tariffs on, tariffs off. I think Canada got threatened with tariffs, 100% tariffs for doing a deal with China and such. And so now a lot of that power has been stripped. I mean, I guess it never existed because it wasn't constitutional, but a lot of it has been stripped, except for a couple of tariffs on, I think it's steel and aluminum, which were implemented under a different law. And so I'm just curious in how the markets are looking right now and kind of reacting to this news.
Yeah, well, I mean, we're seeing the equities markets have a bit of a bounce today. They're seeing Nasdaq up about 1.1, the S&P 500 up about 0.6, but surprisingly, the small caps and the micro caps aren't surging. I would think they would have really taken off. So I don't know if the market is really pricing too much of this in. I think maybe it's already been priced in, because I would expect the markets to move a lot more than they have. I mean, when we look at the markets from a sentiment standpoint and where things have closed on Thursday, we had the put call ratio closing about 1, which is telling us people are betting on falling pricing. And that's usually when we see the market have a bounce. And so we saw a pullback the previous session. Friday, the short-term analysis based on cycles and based on sentiment was telling today was supposed to be a bounce anyway. And so we're getting that bounce, and there's some news. Sometimes they always go hand in hand, and maybe that's, the markets are interesting how they're connected, but the markets aren't soaring like I thought they would be on that news. So it's not as good. It's not a super strong sign, to be honest. Yeah, for sure. I mean, we'll see what happens on Monday to Tuesday when this comes out. But I do think like the market is digesting quite a bit of information. So we had the Fed's inflation gauge tick up. We had I think it was the Q4 GDP numbers come out, and they were significantly lower. I think they were projecting 3.3. It came in at, I think, 1.4. And then you have this news of the tariffs on top of that. And so I'm kind of wondering if, folks are like, okay, how do we interpret this information? It's a real tossed salad, bunch of everything in there.
Because I think the Fed in their recent meeting minutes talked about a rate hike. Like some of them, I don't know if it was the majority or what, but the rate hike discussion came up, and I wonder if that was due to the tick up in their inflation gauge. Yeah,
it could be. I mean, if inflation is going to go up, you think they're going to hold rates or potentially raise them, and who knows what's going to happen? Really, we just have to let things unfold and follow the charts. We're definitely in some very extreme, unique times. It always feels like we're like in that situation, but it definitely feels more amplified than normal. And all of these strong, aggressive talks and tariff stuff and these moves happening. So,
So can we look at the SPY? I'm curious what the S&P ETF is telling us. I was looking at the chart. It seems like it keeps hitting this resistance, and I think it's close to like 700 US dollars. Or whatnot.
Yeah, if we take a look at the SPY chart here, it's having a nice rebound today, up about 0.6%. But it's definitely struggling. Like if we zoom, go back to October highs that we had over here, the market really is just trying to figure out what to do. It's just been kind of flipping and flopping on both sides of that, and we keep seeing the S&P 500 hitting these all-time highs. You hit a new all-time high, a couple more layered in here, a couple more layered in here. And so every time we seem to hit one, we keep seeing some big bouts of selling. And that's distribution selling. If you look at the volume on the bottom, there's some pretty strong waves of selling on those down days. So there's big money rotating out of the market. And so the S&P 500 really over the last few sessions has bounced back up into the middle end of this range. And it could easily go back up and test this kind of upper upper channel. So it's really trendless. It really is. It's trying to figure out what to do. And it's in the lower quadrant trying to, decide if it is going to potentially try and get to all-time highs. The Nasdaq, like the QQQ, is a very different story. It's trading dramatically lower. We've got a bunch of significant lows. Let me just draw across here. A bunch of significant lows kind of through this area where we've got these significant pivot points. And so the Nasdaq is really struggling to get any traction. It should be trading much higher. And I think this has to do with the Magnificent Seven definitely pulling it down. If we zoom out on the daily chart, the Nasdaq definitely has another significant support level, kind of like right through this whole range through here. It's kind of tagged down, dipped into this range over the past few weeks. It keeps trying to bounce and hold its ground. But if it ends up breaking below this level, we could see a very big unwinding. And the Magnificent Seven are already doing that. If we look at the MAGS ETF, which is kind of the basket of those, you can see this topping pattern that's been forming right across here. If I can get this tool to draw through here. But you can see we've got this level that it's broken down, and that's what's really pulling on the NASDAQ in a big way. And so this is pointing to eventually this is just an oversold rally in the MAGS. It's broken down. It's having a reaction high. And I think eventually it'll roll over and continue to go down. So the charts, to me, the equities markets still look really weak. Today's just a bounce within a downtrend for the MAGS. The Nasdaq is under resistance. S&P 500 is stuck in a topping pattern. So that's kind of how I see things at this point. It definitely has more of a bearish look.
Okay, so how about the Dow? So the Dow at 50K was a big talking point. I think even Pam Bondi mentioned it on her Epstein trial thing. But Dow at 50K, do you think this goes higher or?
Yeah, I mean, I don't look at the Dow in terms of like really a whole lot of pricing. Like a lot of people target 50,000 is a pretty big whole number, right? It's half of 100,000. 50K is a big number, so it's an easy one that everybody throws a level on, a target. We definitely got up into that range right into here. We got into this 50,000 mark. It struggled to get through. Then finally we had one big day that kind of popped it through that. And now, I think people have been selling and it's kind of dropped back down and it's trying to figure out what to do. The short-term price action looks a little bit bearish. It could have another leg down. We'll have to see how this unfolds. But overall, I don't look at the values of the stocks or the indices themselves. I really just look at the chart patterns and which way are they talking. Now, short-term wise, the equities market looks like it's struggling. But when we look at all of these moving averages and we zoom out, they're all sloping up. So we're still in a bullish stock environment. And right now we're just in a little bit of a corrective phase, and the Magnificent Seven are trying to figure out what they're doing, which at this point they're heading lower. And we got, as you mentioned, Daryl, a ton of kind of economic news and news that's rolling out. So the market really is just trying to figure out what to do. And it's been doing that for several months. So we're just kind of waiting to see where that big break is going to be. Are equities going to get rejuvenated and shoot higher? Are they going to break down? And it's very similar for the even in the precious metals space.
Mm-hmm. Okay, what's the dollar doing? So I know the dollar had broke below 100, and I'm curious where this is headed.
Yeah, when we look at the dollar, it's definitely trying to figure out which way it wants to go. And this is how it is across the board. Like most assets are linked together. There's intermarket analysis, and most of them are all stuck with mixed signals. So, for example, the dollar here is kind of stuck in this big pause. The big question is it a giant bear flag that will, resolve to the downside and sell off and send precious metals and equities dramatically higher? Or is the dollar forming a bottom, and eventually when it breaks out and starts to run higher, that means probably the stock market's topping out, the economy's getting weak. We tend to see the dollar do very well when there's chaos, global chaos. And of course, if the dollar breaks to the upside, then we're going to see precious metals get sucked down along with everything else. So all of the markets are in limbo in a very big way. And it's kind of like a wait and see. It's a really kind of frustrating time to be. We all want big moves, yeah. But we kind of have to wait and see where everything is going to resolve here.
Yeah, we've been used to big moves, and that's pretty uncommon for a lot of the stock chart patterns, especially with QE and all this distortion that's been that's been in the market. So now folks are getting impatient.
One more quick thing. If we take a look at the Toronto Stock Exchange, for example, it has been bucking the trend. It has been moving higher, and this is one thing we typically see near the end of a kind of an economic cycle, a peak. We usually see commodity-rich indices like the Toronto Stock Exchange dramatically outperform the S&P 500 and the Nasdaq, and that's what we've been seeing here. Money's been moving into these indices. Even I think if we look at emerging markets, right? Emerging markets have been getting the money flows. People just don't know where to put their money in the U.S., so they're moving international, or they're moving to the defensive sectors, which is like utilities. We're seeing utilities have a huge move up over the last couple of weeks. They don't know where to go. We've seen consumer staples, big money moving up in consumer staples, huge move there. Real estate ETF, the REITs have been starting to move up. So this is a sign that investors are nervous about the U.S. They don't know what's going on, and so they're going elsewhere or going to where they think there's low volatility, because a lot of money managers, or pretty much all money managers, they have to stay invested in the market. That's just the way it kind of works when you're managing money. So they're moving away from like the Mag 7s. We can see high volume distribution in pockets, and they all seem to be kind of rotating into the defensive plays like utilities, consumer staples, healthcare, real estate, because they're trying to go somewhere that's more stable, because I think they're worried the markets are going to crash. And of course, they're going to some of the international ETFs as well, as I just showed you.
Mm-hmm. Could we look at the TLT? So some of the guests on the show have been calling for TLT to be the trade.
Yeah, I don't see the trade yet in TLT. I think it's still in a downtrend. It's in a bottoming formation at best at this point. I mean, if rates are potentially going to go up, then we're going to see TLT fall out of bed and continue to sell off if inflation sticks around and all of that stuff. But right now, it is really just really noisy. It's kind of trendless. We have seen a pop recently, put in a little bit of a bottoming, high volatility bottom, and it's popped. But I don't see a lot here. It definitely looks like one of these types of trades that naturally you're like, ooh, I want to buy it here. It looks like it's going to have a big rally. But sometimes when things are blatantly obvious looking, that's usually a play that's not going to work out. And we have seen that. People have been doing that for the last couple of years. Look at the volume. People have been moving into TLT, expecting it to have a big rally, put in a bottom, maybe for rates to fall. And so that's what we see that in the volume. But it's not moving because it's kind of generally wherever the money's flowing into and what people are expecting, the market doesn't really do. If the market doesn't shake you out, which is not really making lower lows, it will wait you out. And that's definitely what it's doing. There's a lot of wasted money. Now, you do earn interest. You do earn a return holding TLT. So it's not that bad. If it does start to recover, then you've done well. You've earned interest, return, and it starts to grow. But it could very easily still make lower lows. And so I don't like to get into position when something's kind of sitting here at the train station. You don't know if it's going to go down or if it's going to go up. And you can really I like to wait for a direction.
So as a trader, where would you be looking for, so if you're looking at a chart like this, where would you be looking for confirmation of a breakout?
Yeah, if I had to look at this chart, I would start to look for some impulse moves to the upside. So let's just kind of touch on that. So more or less, I want to see the 150-day moving average sloping up, which it is, but when you look at it, it's definitely not a super strong. It's more so flat in the big picture of the overall trend. So what we want to see is an impulse move. And an impulse move in an uptrend is very simple. An uptrend is a series of higher lows and higher highs. So you could say, well, maybe it's starting to channel, maybe it's going to work itself, up and continue through this channel. What I would want to see is usually some breaks of some previous significant highs. I like to see a break of two highs. So we could say if it broke this little standout high here and this high here, if it could break through those two resistance levels, those are two ceilings, then it's got enough momentum that any pause or pullback, it should want to continue to go higher. Now, this is a really big pattern. I would probably more so look at this that one and this high over here, and maybe even place it up at this high. I would really want to see it have a huge move, break through this one and break through more so these highs, which really are significant, very significant levels. So if it could post a very big rally, then from there, the pause and pullback would be potentially the next big move, which would bring it up to the next high. And of course, if we zoom out on this chart, you'll notice that's when it starts to really form a base. If I was to just draw a line across here, that to me would be like a rounding formation. And then of course, you'd hopefully be in position somewhere over here, but then you've got this big upside move. So I think there's a lot of work that needs to be done. I don't really care about buying something down near the bottom because I don't want to hold on to it for years in case it's not the bottom and in case it takes years. I'd rather just jump into it when it's already showing signs that this whole bottoming formation has turned. The tide has turned. It's starting to go up. And then you've got like potentially many years of riding it higher. So this is a multi-year pattern, and I wouldn't want to zoom in too close to the daily charts and try and get it in position too early because we don't know where it's going yet, and it's still technically kind of trending downward.
Yeah. Okay, yeah, appreciate that.
Our project is right in the southeastern corner of Wyoming. In the space of 4 years, fully engineered, fully permitted.
The ASIC is what caught my eye, $937 per ounce.
110,000 ounces per annum. First year of production is the most impressive. 132,000 ounces of gold, 24 million pounds of copper. You really want these things front-end loaded like that. US Gold Corp is a near-term, low-cost gold producer in Wyoming. To learn more, go to usgoldcorp.com.
I want to hear about your experience at the conference this year, the Vancouver Resource Investment Conference, because your breakout was packed. And so before we get into the metals, I want to get your gauge on the sentiment. What was the response like? I remember you were coming out of the workshop room. I was able to say hi to you really quick, but people were kind of surrounding you and asking you questions and everything. And so I was thinking, I got to talk with Chris about that to see kind of what was going on and what was that sentiment like? What were the questions like? And what was the reaction to like the information that you shared?
Yeah, it was great. I mean, even last year was a phenomenal year there, and then this year there was a lot more energy this year. It was packed. Everybody was in a very positive mood. Everybody's all excited. Yeah, I mean, I was swarmed for most of the day. I couldn't go anywhere without being stopped and talked to, which was great, and met lots of subscribers there, which was awesome. But it was a really good experience. It's amazing how many people are into technical analysis. Like, I mean, when we go to the VRIC, there's a lot of people who are into fundamentals and stocks and earnings and, what's in the ground of these companies. But there's also the whole other side of people that are more technical, and they're like, they want to follow the price and trade it, which they kind of naturally, we gravitate together. So it was great to see the technicals, and it was a nice mix because I was seeing a lot of people actually present and talk about their stocks, and they were applying, technical analysis to them and stuff like that. But it was a really great environment. I've been to many different events, and by far the VRIC has got the nicest people, the best group. I mean, it feels like it's a lot of fun. 2 full days there just disappeared in a heartbeat. It was great. So,
yeah, it went by.
If anybody's going to an event, I think that's the one.
Yeah, it was. The first day was super long, just because I had to fill in for Jay, and it was a lot of it was a lot of.
Yeah, I saw you up there. You rocked it. It was great.
That first day was chaos for me. I was like, okay, let's get through it one panel at a time.
Yeah.
So I had in my first panel when I was on with Rick Rule, Bob Quartermain, and Ross Beatty, and they've been through multiple bull markets and bear markets in the metals. And each of them were more so Ross and Rick were like, take profits.
Yeah.
Like we are going to see a sell-off at some point, take some off the table. And, and so it was kind of like that wisdom from like multiple bull markets, in that particular panel.
Yeah.
And so, obviously, a few days later, I think it was the end of January, we saw a huge sharp sell-off. I took some profits that week, and such. And so, when you were presenting, were you talking about like, hey, this is getting overstretched, and did you get any responses from that?
Yeah, I did. It's I did two different talks, and both of them I talked about how precious metals, we were in a parabolic phase. Literally, when I was there, I mentioned a few days earlier, I'd shared with people saying if silver breaks 106, it's going to spike to 120 or higher, and it's going to be a blow off top. And that was happening, which was pretty amazing, breaking 106 while I was there. And I was talking about how we're looking to lock in profits. We're in euphoric phase for a very sharp pullback. When it becomes a mass psychology play, everybody seems to be piling in. It's usually when you want to be locking in profits. And I did a panel with David Rosenberg. And so Daniela asked us a question, and I went through the technicals of what all the markets are saying, and the money flows between various asset classes from a technical standpoint. And then when David he spoke after, he's like, yeah, I agree 100% with Chris. And then he's like, this is why some of this stuff is happening. He goes into the whole macro stuff, which was great. So, and him and I were both like, don't be buying here. Get ready. There's a haircut coming. And it's interesting because I did talk to some other investors there. Some people who literally were buying that day as silver was blasting through 106 and spiking up. There was the first time they've ever bought silver, and they were really excited. Mm-hmm. That's usually a little bit of a warning sign.
Yeah. What kind of investment, wisdom would you give to someone? So when people see like these parabolic moves, like, they typically get the urge to like FOMO. They're fearing of missing out. They go and buy at those levels.
Yeah.
Obviously, some people may have a longer term time frame. I was actually talking with my coin dealer, and he mentioned that a lady came in and bought 200 ounces of silver when silver was I think he sold it to her at spot when it was like 117, and then she gave him a check, and the check he said he was going to cash on Monday, and so silver had fell to like 70, $80, and then he gave her a call. It's like, hey, I'm cashing a check, I'm sorry, and she wasn't necessarily concerned because I guess she had like a longer term outlook on it.
Right.
But, people typically FOMO into these assets. And so I'm curious in your perspective on how to resist that urge.
It's tough. I mean, it's human nature to not feel like you're being left behind when it's more painful. It's psychologically more painful to be left behind, to miss out on gains than it is to actually hold on to a loss. There's all kinds of studies that show that. So it's a very difficult thing to overcome. You really do you kind of need somebody to who talks about it and who knows what you're feeling and be like, this is normal. This is a euphoric phase. Yes, you may feel like you're being left behind, but this will fizzle out and you'll be glad you didn't just jump in because emotions sucked you into the trade. You wait till it like digests. Wait for a pause. Like, I'm still very, very bullish on gold and silver. I think they're going to go dramatically higher over the next 5-10 years. It's going to be, who knows where they're going to be. It's going to be ludicrous probably, but it's not going to be a straight ride. And there could be years where it doesn't go anywhere. I think it really comes down to having strategy, saying, okay, I'm not going to buy into euphoric kind of blow off moves. I'll wait and let them pull back and trade sideways for a while, build a bullish pattern, build a launch pad or a base for when it starts to run and break out of that to the upside. You can jump on then. I don't have problems buying something at a higher price if it's actually leaving the station and starting another big leg up. But I don't want to hold on to it for a year or two when it might not go anywhere, or it could continue to pull back. And silver pulled back. I don't know if it was the biggest silver pullback ever in a 24-hour period. I mean, it was like 42%, and margin calls like were through the roof. So there's definitely a lot of pain, but it comes down to having a strategy and just realizing you don't want to chase things, but it's tough. It is really tough. You kind of need a support system in place to not get sucked into the vacuum of wanting to buy it up.
Yeah, I was able to. I had pulled the trigger and sold some that week. I think it was actually the day before the big drop, a couple days before the big drop. Nice. I think it was that Wednesday, and I sold some physical silver. I think they weren't like, because the smelters or the refiners and all of that, they weren't accepting a lot of silver, so a lot of the dealers weren't offering the top price. Right, so I think I sold it for like 108. and then a couple days later it drops, and I was like, okay, I'm glad I did that. And so I've been kind of accumulating a little more since then.
Yeah, we did the same. So like subscribers and I, we got out at silver at 113. We got out at gold at 550, 200 and change. And then the markets went, for a little bit of a nosedive, and now the markets are trying to figure out what to do. But I mean, I think the fact that you can sell into a euphoric phase that shows you have discipline. It shows you've got like logic. I mean, logic isn't always the best. It's not the fun way, right? But it's sometimes the best way, like following logic and rules. Emotions usually blur the lines and you end up holding on to things. So, I mean, it's a really good sign that you're able to sell into that pressure. I know a lot of people were like, no way I'm selling. Like, this is on a roll. I'm like, okay, but you do need to lock in profits at some point. I mean, I'm more of an active investor. I'm not looking to hold gold for 20, 30 years. I want to catch these big cycles. The last time I accumulated gold and silver was 2019 when it broke into a new bull market after like a 7-8 year pause, and then we added more on the COVID dip. But other than that, now I'm kind of unloading. I've unloaded my metals, and I'm going to wait for a new launch pad or for a sharp pullback, and I can just get back in. Just because I've seen the metal space go sideways for a decade at a time to hit all-time highs again. That's a long time. Yeah,
for sure. Yeah, I typically try not to go back and forth with these with some of these folks on X, but someone was like, I had made the point that there's a lot of where there's some very highly emotional silver bugs out there. And so, I made this point, and the guy's just proving my point. Like, he's coming at me. You see the macro case and everything. He says about a book length of a tweet to me, replied to me, explaining all the macro. And I'm just like, dude, like, I already know this stuff. And,
everybody's got their own beliefs and strategy, right? Like, naturally, you're gonna pull in people who have the same beliefs and time horizon that you're focusing on. People who have these crazy, like to attack you with how wrong you are. They have a totally different belief. They believe on what price moves, like what moves price. They have a different time horizon, and they think I'm wrong. And really, I mean, I just have a different time frame. We can both. I could make money on a pullback. And if he and then get back in later and he could just buy and hold it, we can both win. It's just a matter of how do we navigate the storms in between. But but
this guy, it was kind of interesting because he was we agreed on the same thing, but he was, making it sound like, oh, put up your argument against it. And I'm like, well, I'm not here to argue against it. I'm saying that some silver bugs are highly emotional and need to go to counseling, right? Yeah. And and then he says, oh, well, see, we're up another 4%. That proves the thesis. This was the day before the drop.
Yeah.
So then the day after, I was like, should I check up on him? I was like, nah, I'm not even going. I'm not going to open any wound, pour salt on any wounds, or add insult to injury. Yeah, but it just kind of showed some of the sentiment around when these big. Oh,
it's extreme. Moves. I really don't read too many comments because there's just a million people out there that don't see it the way that I see it, and they love to. It's so easy to be sharp and rude online, right? It's just
for sure.
I don't need to deal with that.
Let's look at the gold chart and silver chart. Let's see where they're headed from here. Are we just in a consolidation? Well, I'm curious in what you're seeing.
The gold, as of today, Friday the 20th, is up 1.4%. We can see it's been drifting upwards here. I mean, obviously the long-term trends are still up. This is the big bout of selling. Did quite a bit of damage to the chart, and now we're kind of channeling up inside this big red bar. So, I mean, the long-term trend is still to the upside, but when we look at this big red bar, these are pretty much inside days, inside bars. And so price can naturally gravitate and drift higher in here. And it's still somewhat of a bearish pattern. And at any point, we have a big red bar and it moves down. So, I mean, this is why I was saying all the asset classes seem to be stuck in limbo. The short-term charts are showing distribution, a breakdown, and bearish patterns, including silver and platinum and palladium and all of that. But the long-term charts are supporting it. So that's kind of where we're at right now. Gold is trying to hold its ground. It's kind of running up here. And we'll see if it can eventually build a base. If we were to just zoom out on the gold chart, I mean, we've seen gold go through these series of rallies and pauses. It rallies, pause, rally, pause, rally. Obviously, the volatility is getting bigger each time, and that's where it kind of is right now. It definitely does feel like this type of pullback that we had feels a little bit different than these other ones. A lot more damage was kind of done to the chart. Sentiment was much more extreme here than it was at any of these other ones. Are we going to get one more huge blow-off move? Maybe gold 6,000 and change, and silver, 140 maybe. It's possible, and it'll be another parabolic move. So we just have to kind of wait to see how that's going to unfold. And when you zoom back on the charts, if we take a look at the monthly chart here, when you look at these chart patterns, you get these big parabolic moves, and I like when we get these parabolic moves. They're difficult to trade because you don't know where the peak will be. They're bubbles. They're kind of a bubble phase, and technicals at some point go out the window. So the technicals more or less have kind of gone out the window once we hit 5,200, which is why I talked about how once we break 5,200 in gold, expect some spike and some huge emotional wave of people piling in, because it's like an emotional tipping point where the charts aren't really pointing any higher, and it'll just be emotion driven. And that's what we saw. We saw it go all the way up to almost 5,600, and then it's pulled back all the way down to 4,400, and now it's kind of bounced back up to about this 5,000 mark. So it's flirting around 5,000 on the daily chart here.
Could you go back to that view again?
I was looking at the
monthly. I was looking at the 200 moving day average, and like I see when you so after the 2011 correction, it came like that gap between the 200 moving day and the price of gold. Eventually, the moving day average is moving up, and then it eventually closes. And then now we have a huge gap again, and so I'm curious if that signals.
Yeah, it'd be interesting to see what the percentage is. So here it's about a 210%, and where are we at now? It's about 220. Well, we're at about so 210, 220. So it's pretty much got the same percentage gap as last time, pulling away from that level as we saw back in 2011. And this is exactly what one of the reasons I don't want to hold gold is because of this. If for some reason the market, typically it's like buy the rumor, sell the news. People buy into something because they believe it's got potential, and then the potential of the earnings come out and it sells off. Well, we saw that over here. We've known there's a perfect storm brewing for precious metals. It got bought up, and then kind of everything kind of broke, and then it went into a 15 years before it really broke out of no return and giving back a huge chunk, going from 2,000 all the way down to 1,000, well, 45% correction or so. And so for all we know, the same thing could happen again, right? We could see it pull back, and it could trade sideways for many, many years. And so that's what I don't want to get stuck in. In a perfect world, this thing builds a tight launch pad over the next couple of months, and it starts breaking to the upside. We can get long, we can play it with ETFs or however we want to play the next parabolic move. But eventually we're going to see a big pullback, and we're going to see a multi-year consolidation. And so that's kind of what we need to be aware of. In fact, we can go to silver. I'll show you some interesting silver charts as well. If we take a look at the silver chart, I kind of put both of these up. So the top one is the weekly chart of SLV, so more or less the price of silver. And we can see this pullback that we had. Now this is silver has kind of pulled back a little bit and traded sideways. There's a couple more bars here. But look what happened in 2011. The run-ups, the pauses, and these little hiccups are almost the same in terms of price action. And then a huge 30+% pullback both times. And then we could see silver move up potentially. And then who knows? And then it goes off into a cliff. This was 2011. This is where we went into a 15-year pause in price, right? So this is what I'm talking about. It doesn't matter what the news is. Everybody says this time is different, and they are right. Every time it is different. There's different news, a different scenario, different economic climate. But price does the exact same thing. Price is driven by emotions, and emotions really drive the price action. And so we see these chart patterns. That's why chart patterns are so powerful. They tell us what people are thinking and feeling and shows us what they are doing with their money. And so this is, one way to look at it. We could see, silver maybe have peaked in gold, and we go into a multi-year. It's not what anybody wants to hear, but that is one scenario that we need to be aware of. And if it was to go sideways for 5, 10, or 15 years again, do you really want to hold it, right? Especially if you could buy it back potentially way lower than where it is right now. I still think silver could fall to 50. The chart actually shows, the momentum chart shows it falling down into like $30 or so. There's a lot of potential downsides still in the price action. And here's the monthly chart of silver. Now, I like to use the linear chart, which is the scale, so it's based on dollars. Linear chart amplify the later stage moves, which give you these parabolic moves. They show you the emotions more or less in the market. And I want to be able to read people's emotions, because when emotions are strong, you usually want to be doing the exact opposite of everybody else. And so I really like this. A lot of people in this space use a log scale. And the log scale is a very different, you hear all these people talking about, we got this massive 45-year cup and handle. The breakout has just begun. This is just the beginning. And if they totally could be true, but this is a 45-year chart pattern. I don't really want to wait 20 or 30 years for it to fully play out. And also on top of that, we could see silver pull back, over to, pull back here for a while. It could pull back, and it still could take another 3 or 5 years to get back to these highs before it starts the next run up. And so one chart pattern in one view, if you're really bullish in the space, everybody's looking at this because it points to the start of a 45-year pattern playing out, and it's saying buy, buy, buy. And then when you look at the linear chart, it's just a giant spike, and it's saying sell, sell, sell. So it really depends on the lens you look at the markets through, right? And that's what a lot of, this is the problem with reading a lot of research and jumping from one analyst to another. They all have their own lens, and you're funneled to look through their lens. I look at the markets as raw and pure and unbiased as possible. I want to show what price is saying, what it means typically, what it's done in the past, and just trade based off that. Not that the currencies are going to fail, they all do, that the world's falling apart, but that's also probably why we have this spike in precious metals, is people are already buying into that. We already know everything is falling apart. People don't trust anything anymore, and the government says everything is just unbelievably corrupt and convoluted. And that's why we have these big moves, I think, in precious metals. And so that's kind of my take on the two metals there.
Could we look at so 2008? I think silver fell from, I think it was $20 something to about $9, somewhere around there, right there.
Yeah.
So it was a huge drop.
Yeah, it was 60 something percent. Yeah. And
then how long did it take to rally to the new highs after that? I think it took 3 years.
So that was March 2008. It eventually broke out September 2010. So it took a couple years, and then it took off and had the big 2011 peak before it went into a 15-year pause in price. So I mean, I think we could be very much so in this 2008 scenario. I don't think we're in the 2011 that we're going to have a 10-year, 15-year pause. I think we're going to have a very sharp, another leg down in gold, another leg down in silver. Equities are going to sell off. And then I think we're going to have this huge move where silver probably does get to 200, 300, 400, and gold, is up 7,000, 10,000. I don't know. I think we could see those moves actually happen. And I think it could happen fairly quick, but I do think we could still see gold down another 20, 30%. We could see silver down another 40, 60%. And those are pretty big haircuts. And so I'm hoping to be able to pick them up at a lower price, closer to a stage where, it's going to be starting another rally. I just don't want to get stuck, obviously, in limbo. I have held miners through this. that I bought a long time ago, penning stocks that turned into marijuana stocks and all of that stuff. It's a real waste of time and money. You're just like, why didn't I just sell them like when I knew I should have got out, back in like 2008, 2009, 2010, when they weren't even moving, right? And so I don't want to go through that stage again. I've done it before.
Yeah, for sure. And then especially if the company, does bad, and those companies have to fare through the bad times.
Yeah, they're tough. They're tough goes.
Yeah, for sure. Okay, well, yeah, I appreciate that, Chris. So let's look at one last thing. I want to look at platinum. Platinum had a huge surge and huge cool off. So curious. I mean, the big move from, I think it was October and November, and the whole month of December has had a huge move.
Yeah, it's definitely showing some signs of, like, obviously parabolic price action. If we zoom back, we can see what happened in 2008. Obviously, you can once selling starts, these things can all have a very precipitous waterfall sell-off. I mean, we've already seen it pull back 38%. Who knows? I mean, it could come right back down to this base. But when we look at it, there's a big volume. The volume went from accumulation and some very strong up days to now we're starting to see a little bit of mixed, some big volume selling days. The price action doesn't look good when it comes to platinum. The daily chart, I think, shows it a little bit better. We've got this high volatility price action. When it runs up and gets slammed, and then it runs back up, and then we just start to see these gaps. It just starts to gap and run higher. And then it pulled back, and it's this big hit. This big hit everything in the resource space, and it really did a lot of damage. We broke this low. A lot of damage has been done, and instead of really bouncing, it's just kind of it's just grinding out a bottom or a pause here, and it is showing that this could sell off. I know I just kind of really messed up the charts, but you could argue there's a shoulder ahead, and then this is a very broken shoulder. It's not actually moving up; it's actually just flatlining, which is a sign of weakness. It's a bear flag, and it is pointing to lower pricing. And it's kind of what silver is doing, and a bear flag is also what gold potentially has. So we just have to wait and see where this is going to resolve. But yes, platinum and palladium, they all have pretty much the same chart, even silver. They all look pretty similar in terms of the last few weeks of price action.
Got it. Well, I appreciate you sharing that, Chris. So what are some of the things that you're doing right now? Are you staying on the sidelines, or are you actively trading now?
We've recently moved to cash, so we are just waiting to see where the next opportunity is. We're just kind of sitting here, just cash rich. Is the equity market's going to find a bid? Is something going to spark a big move? If so, we will, as it starts to break to the upside, we'll get long equities again. If the equities markets break down, the big question will be, does that money coming out of equities move into precious metals and create that last potential blow-off big move in metals? Or does that selling pressure turn into broad market selling and everything sells off together? So everything has got a mixed signal. We've got long-term trends of stocks and precious metals are up. Short-term charts are actually bearish, so they're kind of clashing those two trends. That kind of neutralizes the charts. And so we are waiting to see what way things want to go before we take action.
Okay. Well, sounds good. I mean, sometimes you got to be patient and you got to sit on the sidelines. I know.
Yeah, it's not fun.
Everybody wants to get in the game. They wants to get off the bench and get in the game,
Yeah,
but sometimes it's better to just watch from the sidelines.
It is when the markets are falling, man. It is a pretty good feeling, that is for sure.
Yep, for sure. Okay, so people can go to the Technical Traders. I know you're on YouTube, you're on X as well. You put little updates there. Is it all at the Technical Traders?
Yeah, thetechnicaltraders.com. And I just manage my own portfolio, and I share those exact trades, my portfolio allocations, positions. We pretty much put the exact same trades on as members at the same time, and I kind of educate how the markets are moving, why they're moving every day, so that you don't get caught with the FOMO, or at least if you have FOMO, you don't take action. You don't eventually, it doesn't force you into a trade, or when there's panic selling, it doesn't, because we see these waves day in, day out. We see waves of panic selling, panic FOMO, and being able to control those emotions and look at the market from the outside going, okay, everyone's panicking, so I shouldn't panic, because they're usually short-term turning points. And controlling your emotions is the key to being able to have the discipline to follow strategies.
Yeah, for sure. It's about the time in the game, and so you're not trying to get taken out with a career-ending injury or anything like that.
Yeah.
Appreciate you for coming on the show. You all be sure to go check out thetechnicaltraders.com. Subscribe to the channel as well, as the channel's growing, and we're going to continue putting out content like this. So thank you, Chris, for coming back on the show.
Thanks, Daryl. Take care.